right, well, welcome everybody to another live event here for Pepperstone, where we talk about everything to do with markets. Today's topic is an excellent one because it's where a lot of us start as traders and investors, and that's, of course, support, resistance, understanding price action, and bringing it in from a multi-time frame perspective. So where do we start? How do we break down a chart? And, of course, our live analysis of the current markets using some of these techniques today. My name's Thomas Atkinson. As always, I'm joined by Tyron Abella. And Tyron, it's only a few weeks out now from the US elections, so volatility is often pretty much peaking around these types of periods, and we know the VIX has got it in it. Are you firstly excited probably to have the election out of the way, and then also the trade opportunities around it can be good, can't they?
Yeah, I am actually. Welcome everybody. Yeah, I think actually now I just want it out of the way. I think enough of the hype and everything. I think everybody wants it out of the way, to be truthful. We're sick of hearing about it. But I think that, yeah, we're not going to see a steadying market move really until that's all gone and done and dusted. The market's not going to really trend in a good direction either way until it's out of the way. So I think that's probably more the anxiousness of getting it done. And then we can finally get some direction towards the end of the year. Look, we've had a great year's trading. I think the trading for the 2024 season so far has been fantastic. But we're at a bit of a stalemate now, I think, and we need to finish off the year either strong or weak. I'm not really fussed which direction, to be honest. We just want a little bit of a direction, so hopefully that'll get out of the way very soon.
Yeah, I think at the moment we're in a bit of chop, and obviously we've seen some strong metals work. We've got silver here on the screen. So I thought what we'd do is we'd actually go through a multi-time frame analysis technique that we used recently in silver, and obviously that we've used on the show as we've been talking about silver's strength in recent months. From that point, guys, then we'll go through some live analysis, and we'll just comment on the types of pattern setups we're seeing, the types of price action, and the support and resistance. So without further ado, let's get started with silver. And what we always like to do to start off with, we find scalpers and day traders and swing traders probably don't pay enough attention to the higher time frames. So I always like to start on monthly and weeklies. And it doesn't mean you have to sit there for very long, but what you're trying to get a bit of an idea from, and what we'll do over here is we'll go over to the right-hand side, is to get a bit of an idea of where we're at, what type of trend we're in, etc. So once you're on a monthly here, you can notice there's this huge move, and then the market starts to kind of trend down, and then it comes back up, and it seems to be having a bit of a problem at this area here. And of course, most of you would know that as resistance. Now, can anyone tell me, based on the monthly chart as we break down, a pattern that they may start to see appear here on the screen? So anyone here live, can you see it? Put it in the comment section, and of course, we'll go through it. So what we like to get a bit of an idea of here is, has it come back down to maybe a key role reversal? Has it been respecting the technical levels? Ty, you would argue that this is resistance becoming support. Good role reversal, yeah. Nice to see it acting that way. It's always good when you see something technically proof, don't you?
Absolutely, it is. Role reversal is, I'm not sure if it's something that we've actually created, Tom. I know we've been talking about it for a very long time, probably nearly 15 years now, and I've never heard anybody else talk about it. So I'm going to call it's ours. It's one of the most important things, I think. I think it's fair. Yeah. I think our possession's 9/10 of the law, isn't it? And I think we own it. So I would like to think that it does hold up extraordinarily well, and it turns what would normally be support into very strong support when you have a role reversal version of it, and we love it.
We do love it, and it's a great level. So this is where, of course, we've got that price action interaction. Now, this is the best thing to do. Monthly, make sure the market was actually been either trending or it's been respecting one of your at least technical analysis systems. Now, we'll notice here it bounced off and it came through, and it looks like Stuart, Silvio, and a few others are getting it correct. Inverse head and shoulders, you're absolutely correct, guys. So as we then scroll down to a weekly, you might actually start to recognize the structure of the inverse head and shoulders much more cleanly. Beautiful movement here. Obviously, a really strong left-hand side structure, a great base that comes off that role reversal level, and then, of course, a very strong resistance breakout that could have happened in the future. Now, if we get a resistance breakout, the power of using a higher end time frame like this, Ty, is that we can get a little bit of a bias towards a direction based on the higher time frame flow. And I think it's something that we made as a bit of a mistake when well, at least I can comment on this. I made a mistake when I first got into trading a very, very long time ago, as we all do. You have to learn from these things, and that I was on too smaller time frames, and that I would scalp and I would day trade off 1 hour, 15 minutes, 5 minutes. Okay, it was fine. You can make money off those and things, but you're losing sight of the bigger picture. And often when we're questioning what the direction of the trend was, on the small time frames without looking at the bigger picture. So it's where Ty and I would say, coined a very big concept, which is the multi-time frame concept. And if you want to talk about something that's more ours, Ty, I would say this is something that I don't see enough people talk about. The high all the way into the low as well. I think it's something that we've done very well throughout our trading and investing careers. And
absolutely. The
I can tell you
ELD
it's a game
363 system is absolutely ours that we can own.
changer.
Absolutely. And yeah, it is so important. And you're right. One of the common mistakes we used to make was we would be trading on a 5-minute, 15-minute, and 1 hour chart without actually analyzing the movements on the bigger time frame. And then a trade would go wrong, and you think, oh, how unlucky are we? The brokers are trading against us, only to discover that we open up the bigger charts and we were trading against the prevailing long-term trend that blind Freddy could have seen had they opened the chart. And I think that's really why it's so important to understand where the main market flow is going and really working in that direction. Look, we're probably going to cover it a little bit today, but in its most simple form, double tops and double bottoms, inverse head and shoulders patterns like this are always going to work better when they are in the direction of a bigger prevailing trend. Even though they are a reversal pattern, when they're reversing a counter trend of a major trend, they are so much more powerful, aren't they, Tom? And I know a lot of stats have been done about pattern recognition and double tops and double bottoms and how they're not that reliable. That's because they're taking it in the context of the time frame that they're seeing it. When you apply multi-time frame analysis to it and only trade them in the direction of a bigger prevailing trend, I think you would be extraordinarily surprised at how much more powerful they actually are.
This is about stacking confluence techniques. So here we have the left-hand side again, as you mentioned, trend tie. Trend was up, trend has pulled back, trend has come off role reversal. These are keys that we could have seen well before it happened. So now we're very interested in what happens around this 2650, because of course, if it breaks through that zone, as we know with all good patterns, we can take the analysis and we can extrapolate that out. Now, one thing I haven't looked at enough here, and something we talk about, is always have a look at the left-hand side. Now, you may notice that this is a resistance point left from 2012, and it just so happens to also be the proof of where an inverse head and shoulders on this higher time frame would be going towards. Now, you'll see how this becomes such a key point and something that's really made me incredibly bullish on silver for most of 2024. So we broke out over here back in March of this year. And of course, since that point, we've seen pretty much all pullbacks being met by bull demand. Now, by having that strong bias potentially towards the long end, because you've been seeing that, it may have been better to take more of the double bottoms in the 5-minute charts, the 1 hour charts, and the smaller timeframes, because in general, there's probably a better chance that this market was more bullish than bearish. And while that may only be a statistic of 55% in those situations, as you said, Ty, patterns in direction of trend are much stronger though, then you're stacking that with your already existing systems. So if we go back down here and we have a look at silver on the breakout, here's the breakout back in April. And then we scroll over here, as you mentioned, if we see a change of trend, we see pattern analysis such as a double bottom when the market comes down, finds a base, comes up, makes an intervening peak, comes up, breaches through that area. This could be a strong buy. And of course, this is only a 1 hour chart, but what that could be a very strong buy coming off the key level that we've recognized as a breakout, giving us the pattern analysis. So we're waiting for, of course, the confirmation. And then, of course, for us to then use the left-hand side to potentially say, well, this could be a really good take profit. By being mostly optimistic on this particular chart, we may have done better. And I think this is a classic case of why we want to use that higher time frame. Once you start to get the bullish bias because you've been doing the right analysis here, you'll notice it's been going bullish, bullish, bullish. And even the patterns such as this inverse head and shoulders, I'll just show everybody this. It's actually another inverse head and shoulders here on the smaller time frames. Take a look. Here's the left shoulder, here's the head, here's the right shoulder, here's the neckline. Of course, if we took that in the direction of the bull end, because we knew we were more bull biased, let's take that direction now. We'll get rid of the drawing here so we can actually proof it. Take that distance. I don't think it's a miracle that it closes up there, is it, Ty? Very nice.
It's very nice, and I think that a lot of technical analysts, people who like to say, oh, it's all good and well in the past, and in retrospective, viewing, we know where the trend is going well before that pattern is happening, and I think that's the important part. It's not like all of a sudden it turned into an uptrend. Like we've known this has been an uptrend for quite some time. So we're on a 1 hour chart here. So if you didn't know that this was going long even before this pattern formed. That's because you haven't actually looked at the right charts. So I think that's why it's so important. It doesn't mean that you have to trade off a weekly chart or a daily chart, but it's very, very important to understand what is actually going on. Let me tell you how it's like, Tom. We're in the middle of the spring carnival racing season here in Victoria, in Australia, so it's a big, big deal. Very similar to big racing carnivals overseas. Now, understanding what you're going to bet on, obviously racing is all about betting and having fun. If you're going to bet on horses, you're going to need to know whether they're a wet tracker or whether they're a dry tracker. Now, if they're a wet tracker and they're racing on a dry track, it significantly changes their chances. Whereas if they are a wet tracker and you're backing a dry track horse, you're going to have a significantly worse chance of actually having a winner. Dry track and wet track is very similar to understanding where the prevailing trend is going. If you are trading in the direction of the prevailing trend, the bigger trend, you're going to have a far better chance of success than just having a go at the pattern that you're seeing without actually knowing whether that is a wet tracker or a dry tracker. It's very, very important to take. It's all there for us to see. And it's not like you don't have to pay for it. It's not hidden. It's really simply just clicking a couple of different time frames and opening your mind. I think Tom's probably the way to probably understand it best, to make sure it's part of your steps as part of the trading process, to make sure that you're ticking every box. It's like making sure, before you place a trade in any direction for any pattern, what is the prevailing trend doing? I think if we can add another word or another line to the patience, react, don't predict, it would be something along the lines of what is the prevailing trend doing before you place any trade.
Or if it's in the press, it's in the price. I like this one now, but I get your point. Absolutely, we do need those. We do need to always go from the top down. Something built into us, built into a lot of the students we teach, but maybe not built into people that are beginning out in their trading and investing journey, or even people that are seasoned veterans. I find some people that are been trading for 5-6 years, Ty, they still don't look at the higher timeframes. So let's say we had built this kind of more bullish bias. We can obviously see there are sells across the board here. But what you'll find is that when you get quality, solid setups, such as channels, such as here, low, high, low, high, low, high, sits in a range, when it does break out, they generally go more to completion. Whereas the problem with the sell-off patterns that you're seeing, they often either are too quick and you don't get the entry point that you want in here, or that you don't actually see maybe necessarily a perfect kind of completion of the pattern. Especially head and shoulders, they tend to be a little bit worse than inverse head and shoulders, especially in the stock market, because of course stocks are more inherently bullish. So you've got to remember to take more of those 80% off, which means that wrecks some of your stats as well, because you're not going to get as much risk-reward ratio. You always want that good risk-reward ratio. We've got a live question coming in here, so we'll answer it as we go. And this is from Thomas, and he says, how many bars do you consider when defining the prevailing trend? If we've been down for 20 bars but up for 5 1-hour bars, are we still in a downtrend? So I would never look at it as just being bars. I would look at it as a series of higher highs and higher lows, or lower lows and lower highs. You want to basically be able to have a system where you're going to approach it from a methodical standpoint. So of course, what we've done so far is we've done a monthly into a weekly, and we've recognized that there is a potential larger head and shoulders that could give us strong direction of the overall multi-month move, which of course it has so far. Now you're asking, but what about in terms of the movements here? It's all going to come back from, are we at a level of equilibrium as well? Where are we in terms of the charts? So if we have a look at the higher timeframes, which we should always be marking out, and we go back through silver's history a little bit here. We've actually got to go weekly to do this. So we go back through history. You may notice there are some other key levels over here. There is a resistance somewhere around 29.30, which actually got hit multiple times. There is also a resistance around 32, which we would have wanted to mark out. Now, if you didn't have that resistance at 32, you may have accidentally been trying to buy right at this top here, where you actually should have been saying, well, let's pump the brakes, let's look for a pullback. So what we always say is we want to see the trend. And generally the trend is going to start something like this, which is a low, a high, a higher low, and a higher high, okay? And once you've seen that break, in many ways, that's the beginning of trend. I would have to encourage you to go back and watch some of the videos that we've done on Pepperstone's YouTube as well, where we've covered a lot of these topics, because it really is important you have a replicable way of analyzing the markets. If you just say, oh, 20 bars
Absolutely.
down, one back or something, I don't think that's going to work. What do you think, Ty?
No, absolutely, it won't work. Well, it won't be consistent, and it'll always leave you guessing as to what is actually going on. Look, Thomas, Bridle, we had Tom and I when we first started doing our education, the best part of 15 years ago, or 16 years ago now. We had to go through this painstaking process of hand drawing on charts the changes of trend. Now, it was painful, and at the time, it was like scratching your eyes out with a blackboard screeching sound. It was awful. But it was the best thing that we ever did and the best thing we ever learned, actually, because in our minds, there's no doubt which way the trend is going by a very simple look at the chart. Now, we simplified that model that we learned and put it into our Ultimate Masterclass, which actually has a whole module on identifying price action and the prevailing trends. But when you do what you want to take out is the guesswork of when you are looking at you're either looking at an uptrend or a downtrend or a sideways market. You need to analyze that quickly. It's extraordinarily important, one of the most important things actually, to understand whether the market's up, down, or sideways, because that really will change the way or what you're going to trade and how you're going to trade it. So I really encourage you to probably check out some of the videos and look at our lightning bolt concept, because to us, a lightning bolt changes a trend. And I think it's really, really important. I think that while we're at it, Tom, why don't we look at you want to answer that 20 moving average question as well? I think that's important as well from Rob.
Yeah, well, I thought that might be for you, and I'll do the other one. Yeah, because you
Okay,
got
yeah,
the
sure,
20
yeah,
for anyone else.
absolutely.
It's
So
20 is
Rob,
number one.
so Rob, the 20 EMA is one of my favorite moving averages. It's one of my favorite instruments. Well, it's one of my favorite indicators altogether, actually. Look, it acts independently in every time frame. So as you obviously click through the time frame, the 20 moving average changes. It can't know where resistance is. It's very, very important to understand that it doesn't know where resistance is, and it doesn't know where support is in a different time frame. All it's doing is giving us the information of that particular time frame. It's our job to understand, when that support or the dynamic support that a 20 moving average is giving us is not going to be there anymore, or it's going to be under some sort of pressure. It's going to be under a lot of pressure at a point of previous resistance. So it can't know that, and it's very, very important that we understand. And that's why really we're talking about multiple time frame analysis, to make sure that we know where support and resistance is. So yes, they are very, very handy in predicting which way the market is moving in the current time frame, but it has no correlation whatsoever to any support or resistance or any other moving average on a different time frame, for that matter, other than the time frame that you're looking at.
And I just showed on the screen there the difference between the weekly 20 and the daily 20 on the US 500. So you can see that I didn't actually change the particular period, but you'll notice that you've got very well respected. This is this year, by the way. Look at those 20s getting hit. Then all of a sudden it goes below the 20, and this on the daily. And then, of course, it starts to weaken off. Then once it breaks through it again, then we see some respect of it. So, of course, this is the daily. We saw the weekly as well just before. So I think that pretty much answers the question as well. The next question is, hey, guys, what is the main difference between support and resistance and supply and demand zones? Yeah, so support and resistance are basically just lines that you're drawing between either closes or wicks. And you're doing that because, of course, you're looking at basically the highest or the key point where the market has basically stopped and then where the market has found the next level. A supply and a demand zone is actually creating a box structure around that area. So what you're saying is that maybe the market has been accumulating a position. So let's just say I'll draw a theoretical example. Let's say we have this particular area here. A support resistance trader will probably draw a line there and say that's support. Whereas a supply demand trader will draw a box over the top of both of this. And then when it breaks in either direction, let's say it breaks to the upside, they're then going to call that demand. And the reason they're going to call it demand is because we know that the orders that were put through here eventually led to the market breaking to the upside. And that is a suggestion by the market that these were buys and it was an accumulation. So the real difference is that support resistance is drawing lines around these areas, and supply demand is basically creating a structure and then saying, okay, this zone holds interest, and it could therefore be reacted to again in the future should the market come to these key levels. Do I like both? Absolutely. In fact, I'm a structure trader, I'm a supply demand trader, I'm a Wyckoff trader, and I'm a support resistance trader, and I'm a pattern trader. And you might say, well, how can you be all of these things? Because I like to have all of them in my pockets. As Ty knows, he loves a pocket speech. But I have all of them in my pockets because sometimes one of them will be present and I can actually see that other systems are all there as well. And what that does is it builds a confluence of all those traders using those techniques are probably going to be seeing something similar. If it then breaks in the direction that I want, and that is also opposite to what a lot of people are perceiving, even stronger again. So hopefully that helps to answer some of your question there, Calvin. Does it? Let us know in the chat. All right. So let's jump on over from that, Ty, to have a look at some of these live markets because we like to do live market analysis. I know where a couple of interesting points are, so we'll just quickly go lightning round here so that we get through a few things. First up, US 500. I think it's pretty clear that we're in a trapped range. Now, this to a pattern analysis trader could be seen as a channeling market. It could be seen as a potential double top, couldn't it, Ty, in terms of the market and how it's interacting? But what we would want to do is we probably wouldn't want to make a decision on it just yet because has it really broken either of the ranges? Well, the answer is no, yeah? No. So we're interested in the area, but we're not probably doing much in it unless you're wanting to trade short here and long here. Would that be correct?
Absolutely. And that long or short would be required, again, once we talk about timeframes, we want to see a break of that on a daily. We don't want to see a break of that on a 15-minute chart. It's very important that it's actually a significant time frame candle that actually breaks that zone. I think that's one of the things that people overlook sometimes. Like they might be on a 1 minute chart, Tom, and they see a 1 minute break of that level, and like, well, oh, okay, the break is happening. No, you don't want to be doing that because you're going to get a lot of false breakouts on the very small time frame. So just be mindful of that. Use something a little bit more significant, like a 4 hour, 8 hour, or a daily.
Yeah, we want to use higher timeframes to confirm, and that also helps us to therefore be able to dial in on the small timeframes and use it with confidence. The bigger money's behind us. So the US 500 obviously in a bit of a trap range. Now let's move over to a different market. We'll go over to oil because of course oil's been a very up, down, all around. Great trade tool in 2024. Maybe not the best investment tool. I think everyone that's buying oil has been pretty sad with it. However, you'll notice here we've got a couple of interesting things. Firstly, we have a downward trend line, and this downward trend line has recently been snapped towards the upside. We've then come back down to the bottom of this trend line, and what we're seeing is a little bit of a reaction here on the smaller timeframes. So we can actually scroll down to the smaller timeframes and start to recognize a couple of things. First up, do we see a market that is kind of finding consolidation? Well, I would say yes, we do. We basically have a bit of consolidation here. And of course, we have a channeling style market in present, which is an interesting one by itself. And we've currently seen a little bit of an uptick here. Now, it's not quite enough to take out the 72 flat, which is always an issue. But in general, there's been a slight reaction to the upside. So I think a lot of scalpers and day traders are going to be looking at the middle of this range and saying, well, if we start to see buyers and it reticks up here, especially if it reticks up here, due to the left-hand side being such an aggressive sell-off, there is a decent chance that we could make it back up to this area. And if we think about this as structure and therefore like a pattern, we could actually therefore take this distance and extrapolate that out. And what you'll notice is that pretty much clearly lines up with the supply-demand concept as well. And this is the type of thing that you want to do with support resistance and patterns. Can we bring it together with other reasons? If we do, and we see like, let's say reactions off, let's say this zone in here on the scalp side, and we start to see a reaction there, let's say we're like this, change trend towards the upside, there's probably a higher percentage chance here that it will go to here than there is even right now. And I think Ty will agree with that because it's basically a lightning bolt on a small time frame.
Yeah, absolutely. I've been looking at oil very closely, and it's trying very hard to give us what we want. And oil has been the gift that keeps on giving in 2024. That's for sure. So I would like to think that its moves are not even exaggerated. Like I think they've actually been quite predictable, to be honest. I know we've seen a lot of volatility. I know we've had Middle East tension, and there's a lot that has been influencing this price. But one thing I will say for oil is, although that volatility was there, the key levels that have been there for the best part of 2024 have held up very, very well. So yeah, it's always important to respect those levels. But yeah, I see exactly what you're seeing, and there's a reasonable chance that breakout could happen.
Yeah, I think there's a reasonable chance. It's just about activating on the small timeframes, but also, again, that multi-timeframe analysis. You mentioned the key level. Like, why do we like zones down here a little bit more for oil? Well, I don't think anyone would dispute that between around 66 and 68 has been very strong buying support in the past or buying demand in the past. Again, two techniques actually sitting on the same level. So yeah, another good one on the charts. Let's move over because we get asked a lot of the questions. Oh, okay, well maybe it works on currencies, maybe it works on old metals, but I don't like those. I like to trade crypto or something. Well, does it work on crypto? Well, the answer is quite simply yes, it does. Of course, support resistance lines do tend to line up pretty well. Here we've got a little support. The market obviously reacted heavily off that. You can see the downward trend line. You can see the most recent resistance level being around that 68.5, 69 level, acting as a bit of resistance for Bitcoin. So then we can go down to the smaller timeframes and ask ourselves the question, well, have we seen a pattern? And Ty's going to know the one I'm talking about here because, well, firstly, there is actually an inverse head and shoulders there as well. But it's this one here that I want to talk about. We know the trend is up at this point on the smaller timeframes, and we see a market come down, hit a low, come up, hit a peak, come down, hit a low, go up, and break. And that's pretty much a classic double bottom inside of the direction of trend that will then proof to guess where? The resistance level.
That's actually a very, very special double bottom, Tom, because the second bottom or the second trough of that double bottom is actually a morning star pattern. So not only do you have a double bottom pattern in the direction of the prevailing trend, you've also got a morning star pattern right there as the second trough of that bottom. Like that is so rare, and there it is. It's an amazing pattern, and the explosion is not a surprise because that's a very, very strong pattern in itself, let alone as part of a double bottom, let alone as part of a double bottom in the direction of a prevailing trend that proofs to an absolute resistance point. Absolutely magnificent trade.
And a lot of people will say, well, okay, this is good in hindsight. But do remember, if you go through some of the videos we've done here for Pepperstone, or even if you go through some of the stuff we do in our daily show, Ty, the thing is, we've actually been talking about these exact setups as they're happening. And as Ty said, it's not difficult for us to be able to see the pattern of the candlestick along with the pattern, along with the trend, because we're using the multi-time frame technique. And you could be there on a scalping side saying, okay, I'm bullish in here on my little 1 minute, 2 minute chart, etc. And I'm bullish to around this area up here. So therefore, if I get little minuscule pullback entries, guess what you could be doing? You could have a slight bullish bias towards that. And that really does strengthen it. Just like right now, if I was looking at this chart, would I buy that? No. Would I wait for it to come back lower? Sure, you could use roll reversal, which is here, which also just so happens to line up with a couple of things. Look for a potential reaction there. Or we could even look at this second level down here, which I've got as a key kind of demand zone. So again, just using confluence techniques to talk about that. What's this comment? Do you have a morning star with a stutter on the right-hand side too? Okay, thank you very much, Stuart. I'm in doubt whether I should leverage oil moves using CL futures. So that's basically futures markets. In the Pepperstone platform, it would just be the CFD. XLE ETF. Any thoughts on it, or strong opinion on which way may be better? Well, they're different things. So XLF is, of course, or XLE, I mean, XLF's financials. XLE energy is obviously the energy sector. Now, it means it's stocks. So you're basically buying or selling stocks. They are not the same as an oil future. So an oil future or a CFD in oil is obviously usually trading spot price. They have a correlation, but they're not the same in terms of correlation. So one, you're trading companies. The other one, you're actually just trading the spot price of oil. And therefore, if you're doing the analysis on the spot price of oil, you can use that on a higher time frame. Let's go buy oil stocks because I think they're going along. Let's say you saw that giant silver inverse head and shoulder. Hey, that might be pretty strong for buying some oil stocks into the future. Yeah, Ty? Get those dips, get the other things. But when it comes to trading spot, generally you'll want to be doing that on the CFD because you've got to trade what you're actually seeing.
Yeah, they're so different. And I think the biggest highlight of that, because probably in recent memory, probably not recent memory, in the history of trading, the best trade that you could have taken that was absolutely bomb.
We might have dropped Tyrone there. There's some wild weather here in Melbourne today. It's really windy. I don't know. It must be a spring storm. All right. Well, let's go over to some other positions just to kind of show the difference in pattern technical analysis skills. Obviously, pattern analysis and price action analysis. If you're looking at things like flags, remember whenever you're looking at a flag, you really want to be considering the overall break. And usually, what you do is you get your pole length and you extrapolate that out. Now you'll notice that gold has actually hit the entire pole length, not from the breach though. So that could actually take it to 2,800. We've got two Tyrones like Inception.
Hello.
Hello.
Can you hear me now? I started talking about negative oil and I got cut off. I think.
Yes.
But
yes, that's right.
Yeah. But that was a trade that you could actually take, but it was impossible that oil was going to stay negative. That was actually it's an impossibility, but it certainly did happen. But you can be assured that the CFD version of oil did not go negative. The companies cannot go. Yeah.
Well,
yeah.
Well, that's right. You mean companies didn't? Yeah.
Yeah, the companies couldn't go exactly. So it was a very different market. So you got to be very aware of that. Yes, they are correlated, but they're not the same thing.
That's right. And you do need to be careful of that as well. That's what they call contango. If you're not familiar with contango, I'd highly suggest you go look up contango. Now with Pepperstone, I'm not exactly sure of the makeup of the CFD, but generally it's a mixture. Spot is actually a mixture of futures contracts. So where that contango happened, the negative yield was actually, or the negative oil price was actually on the forward, the current expiration futures contract. So generally, again, CFDs are a blend, which can be a little bit more helpful. But I'd suggest that if you're not familiar with contango, you might want to, potentially educate yourself on that because it is something that could theoretically happen again, but it won't happen to XLE. You're right, Ty. All right, let's move to another one. So we just quickly did some some gold kind of flag here. But we've got a question that comes up and it says, could you have traded a bigger double bottom on BTC? The two, yeah, of course you could have. So if we go back to Bitcoin, you could have claimed this is the left hand, this is the right of the bottom, that's the intervening kind of peak, and you'd be looking therefore at a longer term buy. At the moment, it does make some sense. You do need to remember though that this is still quite an aggressive wick to the low. The thing about this, as Tyrone said, is it also has a candle pattern with it. It also has a demand on the left-hand side. This is actually hitting this low. It's not hitting it on the right-hand side. And I don't like these ones as much. So this, I give the tick of approval. This, less so. I think overall, things are looking okay for Bitcoin in terms of the higher time frame analysis. But the short time frame analysis, you can see here the market's taken this little low. And that suggests that, it could continue down for a little bit here before potentially turning to the upside. It's all about creating your edge and creating your confluence when it comes to trading.
And that would be okay, by the way, if it did pull back a little bit more and find support at that level. That would be okay. In fact, that actually does help the trade. In our mind, 2 steps forward, 1 step back approach when a trend is actually happening is a stronger trend than one that's going up in a direction and not actually pulling up properly. So you'll find that actually healthy pullbacks are actually good for a long-term sustainable trend.
Yes. 2 steps forward, 1 step back, as you mentioned, Ty, is one of the best things in markets for a sustainable trend. Vertical ship is not usually good. In fact, I'll just load a vertical example up here. If we have over here the vertical side, then you'll notice this is so vertical that it's eventually going to have a bit of a bad kind of right-hand side. And of course it did. And this is just the Chinese market recently. So just that's the 2 steps forward. That's actually the 1 step back. If you think about it, I'm pretty sure that's a 50% fib. So that's long short, but I can tell you that's 50% fib. I can put it on. You can tell that's half. So that's actually the perfect analogy into the chart when you think about it. Question coming in here: US dollar CAD, is that a cup and handle on the 1 hour time frame? So yes, cup and handles have become incredibly popular in recent years as a technique in markets. So, by the way, that's a beautiful double bottom, isn't it, Ty?
I think you brought them back, Tom.
Talk to them. Huh?
I think you've actually brought the cup and handle back. You started talking about it a few months ago, and now all I hear is cup and handles.
Yeah, cup and handle this, cup and handle that, cup and handle. Well, cup and handle gold was actually, if you want to see
Mm.
the one that I really bought in this year, if you actually look at here's our handle and there's our massive cup component. So this was the massive cup, and then that was the handle that everyone was going on about. But yeah, we've got cup and handle on Bitcoin now. Cup and handle obviously coming through on this US dollar CAD supposedly. So let's have a look. Again, when you're doing analysis, you need to know where you're at. So when we're on the weekly, we know we're at a resistance. I've already marked out a few of these levels because we've done it actually for the Pepperstone live events here. And we can go down to the daily and we can see here that we've got some rejection and then it looks like it's trying to get past that. Then we go to the 2 hour, which is where you're looking at it. Basically, what you're saying here is you're saying that this is the cup and this is the handle. Look, yeah, it's fine. Again, I don't really rate particularly cup and handles any stronger than any other particular setup or anything.
I
Look, you
think
can make a
Calvin's
lot of
looking at the
things
1
cup and
hour.
handles.
It's the 1
Yeah,
hour.
I know
Actually,
he's
I think.
same thing though. You'll see
So
it
very
on
similar.
there.
Yep.
Yeah, this is the cup for sure. Is doing the analysis on. So you can see here though that the pullback, which is like the flag component, because you could also argue this is a flag, like we saw before. Again, two different concepts, the exact same kind of strategy. Is it a cup and handle? Yeah, sure, it might be. I don't really know. You might even argue that this is down here, being a cup and handle as well. Like, yeah, that was actually probably a better one. So do I like it? I don't really think that much around this particular pattern. What instead I would be doing is I'd say, well, we know this is a heavy resistance. We know that the market is consolidating into potentially going for that resistance. We know that if that resistance is taken, it could go to the next level. So, of course, by doing our multi-time frame analysis, we can go and have a look at the higher time frames and see, all right, well, then we'll just randomly, I'll just put this price in here, but there's definitely a possibility of moving quite a lot higher, which is good. So if we see those types of things, then you're in the direction of trend as well. So as Tyrone said before, if we could write another thing on this screen, it might be, are you in the direction of trend? Or have we actually, checked the trend before you trade? I think it was, or something like that. Is that right, Ty? Check the trend before you trade. What was the coin?
Check the trend before you trade. Yeah, and actually, I think that the cup and handles are very selfish pattern, because what about the left-handed people who trade out there? Like, I'm left-handed. I certainly don't pick up a cup and handle like that. I use my left hand, so the handle would be on the left-hand side, not the right-hand side. But hey, that's just me being a left-hander. Essentially, a cup and handle is a cup and handle is a pullback. It's discrimination against left-handed traders. But really, look, I think what the cup and handle, you got to look at what it actually is trying to tell you, though, and it's really trying to tell us exactly what we probably want to know, that the market has actually broken out of a little mini consolidation zone and pulled back to the top of the cup. And that's effectively price action. So price action is actually leading towards a move. And when that cup and handle, if you like, I'm going to call it the cup and handle for right-handed traders, when that actually is in play in the direction of a prevailing trend, it's always going to be better than a cup and handle that is in a sideways moving market with no directional bias.
Yeah. Yes, that's correct. You always want it. You always need it to be in a directional bias, and in this case, it is. I just noticed as well. There's there's actually a head and shoulders in here that's already completed. But
the US dollar CAD has been the gift that keeps on giving. It's been amazing. The US dollar CAD over the last few weeks, you can go through. There's about 4 different time frames, and you'll find no less than every pattern ever created. To go with you. It's been fantastic. Yeah. Especially the ones that we talk about a lot. The 20 moving average pullbacks on the smaller time frames have just been a sensational ride all the way up. It's been really good, the CAD.
And I also like the fact that it's putting pressure on this rejection, what looks like a rejection hammer. Shooting star in this case, but it's actually putting pressure on that to the reverse. That's the type of thing that you do want to see on the charts in terms of just overall. It's a much stronger kind of concept. All right, guys. Well, I guess that brings us probably to the end of today's show. We've covered a couple of things. We're obviously seeing some consolidation on US 500, although the trend is still up. We're seeing gold and silver potentially completing some patterns, which is interesting. We're seeing Bitcoin having a little bit of a pullback, but overall seeing quite a lot of strength potential there on the higher time frames. We're seeing oil at a very pivotal zone, and I thought we'd just finish up here with the dollar ties. We know there's a lot of currency traders out there, and you'll notice here I've said next key resistance. So obviously I've had this area in here already marked out, and look where we are right now. And when we've been talking about the dollar in recent weeks, which we turned bullish on in recent weeks, the market has been going from strength to strength to strength. And again, you might say on a normal indicator, oh, that's overpriced. I would say, well, is it necessarily overpriced? I don't think that's a very good, using an indicator to say it's overpriced is not going to be good enough. Instead, we could say it's at a key point. It may make a decision here. It may consolidate here. I don't know if I'd buy a new position here, that's for sure, Ty, but I certainly wouldn't be making any particular key concepts of is it overpriced or not. I don't know.
The dollar index is, I'm not sure it's overpriced. And I think a lot of people look at that and say, well, how do you even trade that? Just, Tom, very quickly, just pop it over to a 1 hour chart, if you wouldn't mind, and just show the million opportunities you've had to trade, the most simple concept of them all, pullbacks to the 20 moving average in a trend that's going up. And in whatever time frame you're trading, whatever country that you're in, no matter what session you're trading, you would have been able to get at least one or two of those. It's been a fantastic trade. And 104.20 was a very, very heavy level of support not that long ago. So it's no real surprise to see it here as a very important key level to aim for, but also a level where you certainly are looking at it with a fair bit of caution. So very, very good trading on the dollar index. Now, Tom, I think it's important to let everybody know that next week we're actually going to be live in Sydney. So we're not going to have a webinar as such next week because Tom and I are both going to be in Sydney doing a live event for Pepperstone. So we certainly encourage anybody who actually is in Sydney or can be in Sydney next week to reach out and actually register for the event that we're putting on. It's a very good pre-election event that we ran in Melbourne a few weeks ago, and we're following up the Sydney session. So anyone who
I'll finish it for you guys. So basically, yes, Sydney event going to be a great one. We are going to be covering the election, and we're only a few days out from that point. It's October the 30th, and starts about 6 p.m. If you're interested in finding out more, you can reach out. I actually just go to maybe www.fxevolution.com, and you can sign up there. It's in the top right-hand side. It says Melbourne/Sydney event, and just obviously sign up for the Sydney event. Thank you so much, everybody. We hope you have a fantastic week. We hope you're finding lots of opportunities, and you may have just learned something a little bit more about price action, support resistance, and pattern analysis today. From all of us here at the team at Pepperstone, thank you so much. We'll catch you for now. Bye.
Thanks, everyone.